Hello YouTube, we are the Serious Brothers and we are back to talk about the current state of real estate, where it's going in the future, and all the craziness happening in the world and how that's going to affect
how
us.
COVID has changed real estate in the present, both in the property management and also the acquisition side, and how that's going. And one of the reasons we're talking about this is I'll be on a panel for the IGlobal conference on December 10th at 11 a.m. Eastern Standard Time, although I do have jury duty the day before, so it's possible
I might have to be the substitute teacher.
Anyways, link is in description. Please join us if you can. It'll be a great discussion, just going over basically how COVID has changed real estate and how it will change post-COVID. And I think COVID has accelerated a lot of trends. But why don't we first start by just going over how we have adjusted to COVID, particularly regarding property management.
I mean, it's kind of changed everybody's mindset, first of all, in the whole world.
Started with the giant panic in March, like no one's going to pay their rent.
That's the first. Everybody's emotional state got different, and what people were preparing and everything like that. Now, a lot of the predictions didn't quite come true.
Thankfully.
I mean,
some of them, yeah.
Some of them definitely did, but I mean, everybody was saying no one was going to pay rent, everybody was going to get evicted, and there were issues with that, but for the most part, we didn't feel a lot, and that's kind of backed up by a lot of the national statistics we've seen.
Yeah, our delinquency never went. It started off basically the same. It's got a little bit higher, but it's still in the normal range, and that has been a consistent thing I've heard from many landlords, and has shown up in the statistics nationally as well, probably in large part because while unemployment shot up to 15%, almost 15%, the stock market collapsed, I think almost 35%. The stock market's now at record levels. Unemployment is now, it's still high, but it's not crazy high. It's not, Great Depression or even, even Great Recession level highs anymore, and kind of the tiding that over with the unemployment insurance and whatnot. So for the most part, it seems like the delinquents, I mean, you never know.
The stimulus might have had a good reason to keep that up. I mean, and also this is on a macro scale. There hasn't been huge things, but individual situations have been super hard. Some eviction moratoriums have caused people with one or two properties not be able to deal with a situation like that. On a macro level, you might be able to handle one or two situations that don't change the overall level, but some individual situations have been really, really tough too. Yeah. And that kind of plays into what's going on overall with the economy, with businesses, them not being able to keep things going and stuff like that, and the overall economy suffering.
During the early times, I mean, obviously we had a lot of work from home arrangements, and I think this is going to get into the major shifts in real estate is a shift throughout. But we had a lot of work from home arrangements, a lot of meetings by Zoom. Didn't have anybody coming into the office, and we sign leases over Zoom, and that's a long process, and so we send them a copy.
Yeah, well, I mean, like some companies do this before this pandemic happened, where they do everything online. We always like to really sit down and meet somebody and go over things. We had to shift to doing that online and over the phone, so we've had to make changes. Nobody comes into our office anymore.
Well,
our showings,
they're back, but they weren't in April.
And showings, we don't really tour people around the apartments and houses like we used to. I mean, this was a change that was starting to happen before. Yeah. We were using Show Mojo boxes so people could tour themselves. Not everybody wants to tour something themselves. So, but now we'll have an agent go out there and unlock the door, but not necessarily walk them through every step of things.
Yeah. Right now there's a mask mandate in Kansas City, so we're all wearing masks in the office, unless we're filming a video. And we're not, and then in addition to that, we if somebody's going to sign a lease, they can't, or needs to sign something, they can come into the office, but we have the doors locked. We need to open the door, make sure everybody has a mask, go in, sanitize. Lots of making sure masks and sanitization and all that stuff.
But like you said, it's really accelerated some trends. I mean, people who weren't using Show Mojo boxes before, I'm sure are now, because they couldn't meet with people and things like that. People who weren't doing online lease signings before are doing those now.
Or offering. I think there's two major trends that have accelerated from COVID. Both of them are already happening.
Yeah.
One is a bad one. I think just straight up a bad one. The other one is mostly good. So the bad one we'll start with, and that is just a major consolidation of industry. Yeah. I mean, something like 400,000, at least link in the description, small businesses have either gone out of business or at risk of going out of business. There's a major study by Adam Solutions Data that has that looks at the number of small businesses that are either permanently closed or currently shuttered, and they may come back in various cities. And it ranges from the low is 13% in Omaha. Kansas City, where we're at, is second, 15%. The high was 49% in San Francisco. Yes, California has some issues.
We talked about
that one already. And then, in the hospitality industry, it's even worse. It's 37% nationally, ranging 72% in New Orleans, 65% in San Francisco, and so
that's a big renter market right there too.
Yeah, Airbnb has been hammered.
Yeah.
And at the same time, the stock market's at record levels. Amazon is making profits hands over fist. So we see this consolidation. I don't know what there is to say about doing anything about that. That's just something that's going to be continuing happening. Technology has made it easier to grow bigger. Big companies.
I mean, that's a trend that was happening before this, I feel like, and it's just exploded.
I don't think large companies could own thousands and thousands of houses in many, many cities, like REITs type of thing, unless it's completely passive. But now Invitation Homes owns almost 100,000, I think. And so, the technology has made that much easier to do, and that's the next thing. And that is mostly good with some side effects. And technology, show mojo boxes, Rently boxes, for tenants or potential prospects to view houses is now just the norm. Or not the norm, but very, very common.
It's becoming much more, especially for people who have larger operations. For small people only have one or two rentals, they're not paying the money for those kind of services. So.
I do think these things don't move in a limb. It's not like this. This is not how technology moves. It's not how changes economy. I mean, I'm not telling like some silicon nerd where it's like we're talking about disruption. The market's being disrupted. I mean,
this year was pretty disruptive.
This year was fairly disrupted. I just don't want to geek out like that. But I mean, just these are some examples from a book called Exponential Organizations, which I found very interesting, about kind of how, especially of late, technology has radically changed industries and particularly radically reduced the prices of certain things. So, for example, 3D printing was $40,000 in 2007. It's down to $100 in 2014, probably more so now. That's 400 times in 7 years. Industrial robots went from $500,000 in 2008 to $22,000 in 2013. Drones went from $100,000 in 2007 to $700 in 2013. And so, these sorts of things are happening all throughout the economy. And there's obviously limits to this. There's limits to how much you can do digitally. Like, people want contact. Like, Zoom meetings are not enough. They want an event.
People want to physically see the house before they.
Yeah, and they also want to be in the same room as the person they're talking to. A lot of the times, there's only so much you can do over
the internet. Virtually,
there are limits to this. Amazon will take over much of the world, but probably not quite all of it. But I do think if you haven't already, integrating technology into your business on the acquisition side, the valuation side, definitely on the property management side, is just essential.
I think that's one of the biggest lessons is you can't get away with not doing some of that stuff anymore. There's cost to some of it, there's benefits to it too, and you just have to be able to handle some of these things.
I think a lot of people, I remember like 10 years ago, there was guys who liked using technology, and then there's sort of the do-it-yourself types, like, no, I'm old school. You can't be that anymore. You have to start integrating technology as you go. Obviously, property management software is essential.
Yeah, I mean, you can't keep this stuff in your head. I've talked about this before, but if you have any sort of business that you're trying to grow, trying to keep it in your head just isn't going to work. Yeah, you got to be efficient with this. You got to be,
if you're relatively small, like Buildium or Propertyware, we use Rent Manager and are happy with it. If you have large apartments, one site or Yardi or the things
even if you have one unit, use an Excel document. Exactly. Or a Google Doc.
Google Docs. Like we've talked about the Google Doc graveyard, but we use them a lot. Smartsheet is great for project management. Monday is a good service for scheduling. You also got or Podio if you're doing. That's not. Better for acquisition kind of project.
It's for kind of workflow management and stuff like that. There's all sorts of things like this. You got to be using technology to make yourself more efficient. And I mean, one of the things, there's costs to a lot of these things, and so that's why it's getting the small landlord and the small business owner are getting squeezed out, because these costs can be diffused over a large organization. It's harder when it's small, but you still need to find the ones to work and find.
The nice part is the prices are coming down to the point that small investors can start to use them. It's like that midway point is where it's really, really difficult. That's where big companies can afford them easily, small companies can't. but they're diffused. Now we're getting down to the point where small investors can't afford them. Now you can start to compete with the big guys. Rentley and Show Mojo. I mean, those are, if you're property managing, those are very. Even we have a combination. We have leasing agents and that. Yeah. But I think having that is definitely something that you need. Smart locks, where are something to consider. We've talked about our thing where we don't replace the doorknob, so that way your resident can't get locked out at night. That's not really technological, but smart locks are an easier way to.
Well, it's a way of innovating, which you're gonna have to do as things continue to change too.
Yeah, mail scanning services like Sasquatch can help. I mean, that's using Adobe, some of the Adobe features for like signing, DocuSign or things like that. I mean, Pay Near Me for tenants to pay online. Smart thermostats like Nest. I mean, there's 1,000 different list source services like ListSource or CoreLogic for information to get if you're wanting very specific mailings for acquisition. If you like people who have a large amount of equity, who live out of state and own rentals, or one way we find banks who have lent to people in a certain area or to investors in a certain area. There's an endless series of things like this. I know we're just running off a list here. Hopefully, rewind and take some notes. Give us some extra watch time. Services like Yellow Letters, I believe, has handwriting machines for their letters.
Yeah, and that's the thing. Like this technology is growing where these handwriting machines are coming down in price, but you can't buy a handwriting machine yourself.
You could.
Well, it's not efficient to do that if you're trying to send out 100 letters a month or something like that. But you can pay for a service to do that kind of thing for you.
I mean, SEO marketing is also a big thing now, too, if you're going for acquisition, which is also tough. It's sort of another consolidation thing. If you're not on the first page, you're on the last page. Yep. But if you're particularly in a smaller market, our cousins invest in Emporia, Kansas, which is a small market. You can dominate the SEO there. Yeah. And so that's something to definitely consider, or go big. Why not? Mailing campaigns still work, of course. So, and then, I mean, we should give a shout out to our friend Paul Wooster.
Yeah, Simplify. They're trying to change the whole game.
Too Wise. They're going property. They're like taking all of it online, other than maintenance.
It's a really interesting idea. Yeah. I mean, they're basically trying to get rid of in-person property management to kind of
disrupt,
but keep the same service, get rid of the overhead, and make it work just as well.
Yeah, so it's all consolidated. People call in there and they sign their lease.
And that could be where real estate and property management has to go at some point.
It might be.
We'll see. That's one thing we know about the future. We know some things about the future, but we'll never be able to predict all of it.
Things are going to change. They're changing more rapidly these days. You do need to be flexible. You also need to keep track of all this stuff. You need to be looking at the new app. A lot of the new apps are, I got a new app. We're got a new launch we're looking for venture capital, whatever. A lot of them are worthless, but you do need to be keeping in touch with those. I think building your brand, doing what we're doing now, getting on sites like Bigger Pockets and building your brand there and networking are sort of the new, a new way to kind of build your reputation, to establish yourself as, like, you can point to, if you write articles for Bigger Pockets or REI Club or Think Realty, you can point to those when trying to talk to private lenders or banks or even people you're trying to buy from. Show that you are serious. You write for a real estate website. That was much harder back in the day. You write for a newspaper or magazine, it's gone. Like when you're pulling it out of the shelf, you almost seem like a narcissist. Now you can just point them to it. So getting online and getting involved in these communities and keeping track of the new technologies and integrating that technology into your business is essential, because things are changing rapidly, and it's going more. There is a limit. There's a point. Like, I think there's going to be all sorts of pushback against the increasing use of Zoom meetings and phone calls and stuff like that. It's always
kind of a push and pull, because you go too far. I mean, tech companies have no customer service. Nobody you can even call. Somebody's going to innovate and go, we're going to have somebody dedicated to kind of take care of you, and they're going to take an advantage based off of customer service rather than taking advantage of technology.
The only point I'd probably make there is don't remove the entire human element from this. You need to be able to, your residents need to talk to you. Sellers want to talk to you.
I don't think there's a competitive advantage there.
You're not going to be able to just send off offers left and right as if you're some robot entity. You still need to build rapport as you always would. But the days of being able to do real estate investment and property management without integrating newer technologies are effectively over.
Yeah.
The industry is consolidating, which is not great, but there's still opportunities, and there's also more opportunities to grow, to scale. I think scaling is easier now than it's ever been.
I think it's harder and harder and harder to do real estate investment and property management, but it's easier to get into it and learn about it. Yeah. So there's so many resources.
So it's give and take, and that's how it always is. In a buyer's market, it's tough to sell. In a seller's market, it's tough to buy. There's always give and take, and there's positives and negatives for this. And so I think you just accept that this is kind of the reality thing, and hopefully COVID will be a thing of the past very soon in 2021. But again, keeping those. We're probably gonna have at least some of it with the masks and the making, doing showings without.
And it's all unknown at this point. The one thing that is known is if you hit that red button underneath this video that says subscribe, it'll make a number go up on our channel. That is a good thing
for me and for Phil,
and probably you too.
The other thing
because you'll see more.
The other thing that's sure is that the IGlobal conference will be happening. They will be virtual. You can join. We can join us at 11 a.m. on December 10th, Eastern time.
Well, it's not as certain as you'll be there.
Well, I'm not. It's not certain that I will be there. I will likely be there. Philip will probably be there in my place if I'm not. But regardless, it's good times. You should join us.
Yeah.
And you should subscribe and share it and all the rest of those things.
Like all the stuff we say in the other videos.
Just do it, right?
I'll see you guys.